What's up, friend? Chelsea Winstead here. I am going to be diving in and really giving you some detailed explanations on what to expect as a home buyer. I work with a lot of first-time home buyers, but even a lot of repeat buyers who do not remember this. This was not ever effectively explained to them, and I think it's important for you to understand kind of the second piece of the puzzle. So most people have heard of a down payment when it comes to purchasing a home. This is a minimum percentage that a bank is going to require that you bring to the table to essentially, have skin in the game and to be ready to purchase. So if you're a first-time home buyer, this can be as low as 3% with a conventional loan. If you are using an FHA loan, that's going to be about 3.5% of the purchase price. If you're using a VA or a USDA loan, you can often do 0% down. However, the piece of the puzzle that's not often as understood are your closing costs, okay? And that's just because it's not as marketed, it's not as explained. So a lot of people get a bit shocked when we hit this piece of the puzzle because closing costs, quite frankly, can be another 2 to 3% of the loan amount, okay? Now, as a caveat and just as an FYI, when I work with my clients, especially if this is something that you need help with, we dive into different strategies and ways to have these things paid for on your behalf, especially with things like seller credits. So if we work together, that's something that we'll discuss. But it's important that you understand what closing costs are and what they are comprised of. Okay. So this is going to be a quick video that's going to run through kind of 4 buckets of closing costs and things that you need to be prepared to pay as part of the total cost of purchasing a home. So closing costs, there's 4 categories or kind of 4 buckets that this is all pulled from. So number 1, you're going to have lender fees. Number 2, there's going to be third-party fees. Number 3, there's going to be taxes and government fees. And then number 4, there's going to be prepaids and initial escrow. So to quickly go through these, so lender fees, these are charged by the mortgage company. And essentially this is what banks have to charge to keep their lights on, right? So this is helping to pay for the processing, the underwriting, and the funding of your loan. At every mortgage company that exists, there are people that are staffed at those entities. A lot of the time, this fee that you are charged is to maintain the operational overhead of these companies, and it's going to pay for the staff that is ultimately helping you get the loan, okay? Third-party fees. So these are services that are required to fulfill the full real estate transaction, but they're handled by outside companies that are not the lender in particular. We'll dive into like what those are. Taxes and government fees are actually required by the state and local government. The lender does not control this. These are non-negotiable. This is really just like what the cost is to record and to transfer that home ownership to you. And then the final piece, this is the part that's often the most expensive and also the part that surprises a lot of people. These are going to be your prepaids and your initial escrow funding. Okay, so we'll get into this specifically, but just note that these aren't actually fees. You're really paying upfront for future bills. So you're paying in advance for things like property taxes, homeowners insurance, prepaid interest, things of that nature. So again, we'll dive into that in just a second. But so add all of these 4 buckets together, and these are going to be your closing costs. So again, when you're purchasing a home, there's 2 buckets. You've got your down payment, and then you've got your closing cost. This is what closing costs as a whole include. Okay, so let's dive into some specifics here. So let's go into the lender fees. So a lender fee can include things like the following. There can be, so whenever you get a loan estimate or like a quote, essentially, for different banks, up in this top left section, there's always going to be a lender fee. And this is going to include things like an origination charge. And this is really in addition to a processing fee, et cetera. So often origination fee is a percentage of the loan. I don't love those. P.S. I'm a mortgage broker, so I actually shop between a variety of different banks on your behalf. None of the banks that I personally work with charge an origination fee, but often when you see companies that market that they have really low interest rates, a lot of the time they hide some of that cost into an origination fee, which again, when we work together, we dive into the nitty-gritty of this. But so these are what you're going to see in that top section. Origination fee, I don't love. Underwriting fee or processing fee, again, those are a little bit more standard. These normally are flat fees. So underwriting fee would be like one charge of $9.95, or a processing fee would be like one flat charge of $13.95. Whereas an origination fee would be like a percentage of the loan. So 1% of your loan amount would be an origination fee. Now, bullet number 4, this is your discount point. When you are getting quotes and when you're purchasing a home, you have the option to pay the bank. You're like prepaying essentially for a lower interest rate. So let's say today the interest rate, and I actually just looked, like the average rate for a 30-year conventional loan today is a 6.13%. So let's say you wanted to actually lock in a 5.5%. You could pay what's called a discount point. So you're paying for a discounted interest rate, and that fee would show up under your lender fees. Okay. So anytime we talk about doing a rate buy down, or you hear that term used, where you would see that fee show up would be under the lender fees. Okay. And so these, again, our fees are going to vary from lender to lender. This is also why I personally moved away from working at one mortgage company and moving into the ability to shop for my customers, because I wanted to be able to always compare options. So lender fees, I will say, this is also where you find a lot of it's just important in this section to really pay attention, because this is often where a lot of companies will hide fees or market something but then charge you for it. So again, it's important to also work with somebody that you trust to review this information alongside of you, so you know exactly what you're looking at. So lender fees is going to be like the first bucket of cost, or first bucket of fees that are lumped into your total closing cost. Okay. Third party fees. So let's talk about this. So these are required, but these are not services done by the lender, but they are services that essentially, so things like an appraisal, a title search, title insurance, paying for the closing attorney to actually get all the paperwork together for you to sign and confirm, right, that you own it, surveys on occasion if they are needed. The reason that these fees exist and what these essentially are is, number one, it's really to protect the lender, but then by proxy to protect you as well. So as an example, an appraisal, the purpose of an appraisal is to confirm the value of a home, right? The reason being is that the lender, so the banking company, they want to make sure that the home is worth what you are paying for that home, right? They don't want to also give you more money than the home is worth, because let's say something happens, you default on your loan, you can't pay that loan back. They don't want to then have an upside down scenario where technically there's more money owed on that home than what it's worth, right? So then at the front end of this transaction, they require an appraisal to make sure that you are not, right, overpaying for the home. So that's meant to protect them, but it's also meant to protect you. Other piece, so any of this title search and title insurance, honestly, I could do a whole video on this, and it seems kind of like a crazy, not necessary thing, but I've had actually now multiple transactions where we end up finding out that somebody else has ownership on the home. So the title search and title insurance is to protect, again, you and the bank in case that they want to make sure that basically the property is legally owned by the seller. And there are crazy times where people basically take out loans, or they put up their home as collateral. I'm sure you've maybe heard this before, where you can put up your home as collateral. And sometimes during real estate transactions, we find these things. So title search is just to ensure that that property can actually legally be sold from one entity to you. That's part of those fees. And again, the hidden liens, again, that collateral piece, the appraisals for value, but then the legal fees associated with making sure that everything within the property is legally owned. Surveys can often be done if there's ever a question of, let's say you're buying a property and somebody's fence line, it looks like it's on your property, or somebody's built a shed and it looks like it's going to be on your property. Things of that nature are meant to protect you legally prior to making that full purchase. So that's why these third-party fees exist. Okay, taxes and government fees. So these, again, are really just required by the city, state, county. They're recording fees to officially record the mortgage with the county. Transfer taxes. So I will say transfer taxes, y'all, depending on where you live, some states this is very cheap. Some states this is very expensive. Some states you split this fee 50-50 with the seller. Again, it really depends. There's not a one size fits all. You really actually have to look at the transfer tax requirement for the state that you're buying in, but that's something important to note. This also can include any property taxes that are due at closing. Now, here's the big thing. These are not negotiable, right? This is set by the city, the county, the state. They're regulated. It's location specific. So I did just want to highlight that transfer taxes is the one that can bite you sometimes, because I've seen these be in the thousands before, whereas there are other places where it's $150. So PS, if you're wondering, look at the city and the state that you're interested in buying in, type in, what are the normal transfer taxes for location? And it will tell you. So just be prepared for this, because again, depending on where you live, that can add a good chunk of money to the cost. Okay, final piece here, prepaids and escrow. So again, this is one that a lot of people, once you get into the information, you're like, oh, that makes sense. But again, like if you don't know, you don't know. So prepaids. When you purchase a home, you are actually prepaying for a full year of homeowners insurance, right? So think of like an auto policy, you pay in advance and it covers you for a duration of time. When it comes to homeowners insurance, you are technically, when you close on your home, you have prepaid for a full year of coverage. So you're paying for an entire year of homeowners insurance. That's included in your closing cost. This can also include some prepaid property taxes. Normally you split this with the seller. So again, like this is actually really dependent on the city and the state you live. When the county collects taxes, there's some like elements to that. Initial escrow. So to kind of not to go high level, an escrow account is essentially a mini savings account where every month your mortgage company takes a small monthly amount. So they take your total payment and they take a small monthly amount and they put it in an escrow account, which is a mini savings account, essentially. That escrow account builds every single month. And then the following year, when your next homeowner's insurance premium is due, and when your next property tax bill is due, the mortgage company pays this on your behalf out of your escrow account. Okay. So when you close on a home, a lot of the time, mortgage companies want you to fund some initial deposits into that account. The reason that they do that is because, again, if you have been, depending on where you live, it's pretty normal for property taxes and homeowners insurance to go up every year, okay? Most of the time, the increase is gradual, depending on where you live. Again, research is required on that. It can be a big jump, depending, so just keep that in mind. So the reason that they're wanting you to fund some initial money in that escrow account is to have a small buffer, so that way next year, when your policies are due, the hope is that you have enough money in your escrow account to cover that, okay? Final thing that you'll pay in this section is prepaid interest. So you're going to pay, and again, the math on this. So you're going to be prepaying for a certain amount of days up until closing. Kind of a hack. The later in the month that you close, okay, the less prepaid interest that you pay. Again, I can do a whole other video on just this section alone because there's a lot to get into. But overall, prepaid and initial escrow payment is prepaying for 2 annual bills. So homeowners insurance and property taxes. Again, you'll split that property tax bill with the seller, depending on the county dates, etc. This also will be funding your initial escrow account. And the amount that you have to put in, see how this is 2 to 6 months, it depends on the bank that you ultimately decide to use and what their requirements are. And then prepaid interest, again, is prepaying for a certain amount of days, but from when you're actually like closing through whenever you're like through the end of the month. I'm debating on if I should go into that, but it's like kind of honestly could be its own video. So more to come on prepaid interest. I will create a separate one. I don't want to go off on a huge tangent on this, but in general, this pocket, right, it's basically funding, again, that mini savings account, your escrow account, and also paying for these premiums all at once. So when you add all that together, lender fees, third-party fees, taxes and government fees, and then prepaids, this then is this is what your total closing costs are, okay? Depending on where you live, again, this baby right here often tends to be the big boy. The only exception is if you're wanting to do a pretty big rate buy down, you'll see that this section, the lender fees, would be higher because, again, you're prepaying a certain amount of money to lock in a lower interest rate, okay? You add all this together, most of the time, this is going to be between 2 and 3% of your purchase price. Depending on where you live, depending on what's going on. Again, this is something that I strategize with all of my clients on personally. We can work to create a plan or a goal to figure out how do we get the seller, ideally, to pay for the bulk of these costs on your behalf. Again, we have to dig into like where you live personally, what you're looking to accomplish, etc. But that is a strategy that I try to put together with all of my clients, okay? So hopefully this was helpful. Again, closing costs, broken down, explained. This is a kind of that hidden piece of the puzzle that a lot of people don't realize and understand. And so hopefully this video was helpful. If you're looking to buy a home in the next year, 2 years, 3 years, please subscribe. If you have any questions, comments are always open. And if you want to work with my team and I, link below this video will have all of the goodies for us to connect. See you guys soon.